Today, we delve into the most significant global news stories that have unfolded recently. From the plummeting price of Bitcoin to regulatory changes in the cryptocurrency sector, today's topics are critical to understanding the current landscape. Here are today's top 10 stories you need to know. In the current cryptocurrency landscape, retail traders are playing a significant role in driving market activity. As institutional investors navigate uncertainties, retail participation has surged, with many individuals taking advantage of the volatility to capitalize on price movements. This increase in retail trading activity is reshaping the dynamics of the market as individual investors influence price trends and market sentiment. Analysts are observing this trend with keen interest, noting that it could lead to more diverse market movements. The future of cryptocurrency trading will likely be shaped by the balance between retail and institutional investors as they navigate the evolving landscape. As this trend continues, the impact of retail traders on market dynamics will be an important aspect to watch in the coming weeks. As Bitcoin's price plummets, the overall sentiment in the cryptocurrency market is shifting dramatically. This decline can be attributed to a combination of regulatory concerns and macroeconomic factors, including rising interest rates. Investors are becoming increasingly cautious, leading to heightened volatility and uncertainty across various digital assets. This bearish trend has prompted many traders to rethink their strategies, with some considering reallocating their investments into more stable assets like gold or traditional stocks. The implications are significant for both retail and institutional investors as confidence wanes. While some view this downturn as a potential buying opportunity, others express concern over the possibility of further declines. As market dynamics evolve, the next few weeks will be critical in determining whether a recovery is feasible or if the market will continue to face downward pressure. Traders must stay vigilant and responsive to changing conditions. In the cryptocurrency market, XRP is experiencing a surge of interest, with analysts predicting a potential price increase to $7 by 2027. This optimistic forecast is fueled by growing regulatory clarity and a surge in institutional adoption, which are critical factors for the cryptocurrency's long-term viability. Historically, XRP has faced significant challenges, particularly due to legal disputes with regulators that have clouded its reputation. However, as the market evolves, many investors are now looking beyond Bitcoin, especially as it grapples with volatility. The increasing acceptance of digital assets in mainstream finance suggests that XRP could become a more prominent player in the market. Additionally, the ongoing developments in cryptocurrency regulation will significantly influence XRP's trajectory. As this landscape continues to shift, XRP's ability to capitalize on these opportunities will be vital. Investors are keenly watching for developments in the coming months that may solidify XRP's position in the market. In the mining sector, Bitdeer has made headlines by selling over 206 Bitcoin in just 1 week. This aggressive selling strategy indicates a shift in how mining operations are approaching profitability amid fluctuating market conditions. By liquidating newly mined Bitcoin rather than holding it, Bitdeer is adapting to the current market landscape, which is characterized by increased volatility and uncertainty. This decision reflects a broader trend among miners who are seeking to secure profits rather than risk potential losses from holding on to their mined assets. As the market continues to evolve, the strategy adopted by Bitdeer may serve as a blueprint for other mining operations. Investors are keenly observing how this approach affects the overall supply of Bitcoin in circulation. The implications of these actions will unfold as market conditions change, making it essential for miners to remain agile in their strategies. As Bitcoin struggles to maintain its dominance in the cryptocurrency market, institutional interest is increasingly shifting toward altcoins. Recent declines in Bitcoin's value have prompted many institutional investors to diversify their portfolios, seeking opportunities in alternative cryptocurrencies. This trend reflects a growing recognition of altcoins, particularly those with robust fundamentals and innovative applications, such as smart contracts and decentralized finance platforms. Analysts suggest that an influx of institutional capital into altcoins could drive significant price movements, enhancing their visibility and acceptance. Additionally, as regulatory frameworks evolve, providing clearer guidelines for institutional participation, the potential for altcoins to gain traction becomes more pronounced. This shift may not only transform liquidity and market dynamics, but also reshape the competitive landscape of the cryptocurrency sector. Looking ahead, as more institutions explore and invest in altcoins, we can expect a more diverse and resilient cryptocurrency market, with altcoins playing a crucial role in its future evolution and sustainability. A landmark regulatory update from the U.S. Securities and Exchange Commission and the Commodity Futures Trading Commission has reshaped the cryptocurrency landscape. This new framework delineates clear categories for digital assets, distinguishing between commodities, securities, stablecoins, and unique digital collectibles. Historically, the lack of clear regulations has led to uncertainty, stifling innovation, and deterring potential investors. The shift marks a significant change from a reactive to a rules-based regulatory approach, providing much-needed clarity for market participants. Experts believe that this coordinated oversight will enhance the legitimacy of the cryptocurrency industry, fostering trust among investors and institutions alike. The announcement has been met with optimism among investors who are hopeful that clearer regulations will facilitate greater institutional adoption. As the market adjusts to these changes, the focus will shift to how these new classifications affect existing and future cryptocurrency investments. The coming months will be pivotal in observing how this regulatory clarity influences market dynamics and investor confidence, particularly as firms strategize to align their operations with these new guidelines. In the world of cryptocurrency, AlphaPepe has made headlines with its presale reaching an impressive $1.43 million. This remarkable achievement highlights growing investor enthusiasm for innovative crypto projects. As Stage 17 of the presale goes live at 01822, interest in AlphaPepe is rapidly growing. The project has garnered attention for its successful audit and increasing holder count, which now exceeds 9,100. This momentum is further bolstered by the positive traction of its AlphaSwap demo, which has seen participation from over 5,000 users. Analysts note that the successful presale reflects broader confidence in the cryptocurrency market, particularly among retail investors seeking new opportunities. The increasing participation signals a shift in market sentiment, encouraging more investors to explore emerging tokens. With expectations for a planned exchange debut in Q2 2026, AlphaPepe could soon become a notable player in the crypto space. The upcoming weeks are critical for the project as it seeks to maintain its growth trajectory and capitalize on current market interest, positioning itself strongly ahead of its official launch. The recent decline in Bitcoin's price has triggered a significant rotation in the cryptocurrency market. Following a 3% drop on June 1st, Bitcoin's downward trend continued, further intensifying selling pressure and raising concerns among investors. This decline is notable, as Bitcoin has historically been seen as the bellwether for the entire cryptocurrency space. In contrast, Ethereum has shown resilience, with only a slight decrease of 1.3%, indicating a divergence between the two leading cryptocurrencies. Analysts note that the ETH-BTC trading pair is suggesting a bullish divergence, highlighting Ethereum's strength relative to Bitcoin. This shift represents a crucial moment for altcoins as traders reassess their positions in light of Bitcoin's struggles. The increased trading volume has confirmed aggressive selling across the market, prompting investors to explore the potential for altcoins to gain traction. As institutional interest in Ethereum grows, the divergence could reshape market dynamics significantly. With uncertainty still looming around Bitcoin's performance, the next steps for investors will be critical. Investors should closely monitor emerging altcoins, as they may define the next phase of market evolution and recovery. Amidst the turmoil in the cryptocurrency market, Ethereum is experiencing renewed optimism. Analysts are predicting that Ethereum's price could soar to $10,000, driven by increasing institutional interest and favorable market conditions. This bullish sentiment follows significant developments in Ethereum's utilities, particularly with the rise of non-fungible tokens, NFTs, and its growing adoption in various sectors, including finance and gaming. The current market dynamics, including the rise of stablecoins and the strengthening of decentralized finance, DeFi platforms, are expected to bolster Ethereum's position as a leader in the blockchain space. With Ethereum's price holding relatively stable compared to Bitcoin, many investors are now viewing it as a potential safe haven amidst ongoing market fluctuations. This resilience could attract further investments, especially as regulatory clarity improves across the globe. Institutional players are increasingly integrating Ethereum into their portfolios, signaling confidence in its long-term viability. As Ethereum continues to establish its dominance, the focus will be on how it competes with other cryptocurrencies, particularly with the impending launch of Ethereum 2.0. The coming weeks will be crucial in determining if these predictions can materialize, especially as broader adoption trends unfold in the rapidly evolving digital asset landscape. In a significant market development, Bitcoin has fallen below the $70,000 mark for the first time since April 8, 2026. This downturn was triggered by the largest institutional holder of Bitcoin, Michael Saylor's strategy, announcing the sale of some of its tokens. This marks the first sale in over 3.5 years, raising concerns about the confidence of institutional investors in Bitcoin's long-term value. The price briefly dropped to $69,690 early on June 2nd, reflecting a decrease of more than 3.8% from the previous day. This decline has sent shockwaves through the cryptocurrency market, leading to a broader sell-off and increased bearish sentiment among traders. Analysts note that institutional selling can destabilize market confidence and may lead to further declines in Bitcoin's price. The pressure on Bitcoin could result in additional losses unless a recovery occurs soon, as many investors are now reevaluating their positions. Market watchers are also contemplating the potential impact of regulatory scrutiny on future price movements, as increased oversight could further shake investor confidence. The next few days will be critical in determining whether this trend will continue or if a rebound is on the horizon. With significant resistance levels ahead, investors are particularly focused on upcoming market indicators that could signal a shift in sentiment. Thank you for joining us as we explored today's top global news stories. Which story shocked you the most? Let us know in the comments below, and don't forget to like and subscribe for more updates.